What's up guys, this is Chris. Welcome back to my channel. In today's video we're talking about update to one of the best stocks ever called on this channel just last month in February, I believe, and that is FINVolution. All right, my Fin family, we have some major moves out here today. You can see that FINV stock is up 93% in a single day, and this is a stock that we've talked about on this channel when it was $3.60. Okay, and since then it obviously has made tremendous gains. So right here in this video I'm going to tell you guys what are my thoughts on this stock still, what prompted this move, specifically what are the important things that were taken away from the earnings report that was released last night, and let's talk about what I'm doing with FINV today. So for those of you that are not aware, FINV is a Chinese fintech company. They do lending to a lot of consumers, and their business model is around high credit consumers and institutionally backed loans, meaning the whole business model is very safe, and they took many years to develop these steps towards running a profitable and sustainable, reliable business model. Okay, they've been driving increases in revenue and in profits, and they've been improving the delinquency rates for those loans. So for the most part, people do not default on the loans, and it's very secure and safe. And it has a lot of other positive things going on for it. Just recently, with this earnings release, they announced a 42% hike to their annual dividend that is paid out in April. So if you are a dividend investor, you wanted to get on that, that's definitely something you might want to consider. They also routinely do share buybacks, and the CEO or co-founder, does a lot of buying of shares himself. He owns about 30% or more of the company at this point in time. So a lot of great things for shareholders with this company, and we're going to dive right into those earnings results. And my God, those are some of the best earnings I've seen coming out of a Chinese company in quite some time for sure. And it certainly beat my expectations for this company, and that is why here today you're seeing insane record levels of volume, right? If my numbers are correct, 70 million shares were traded today, and the average volume is 1.7, depending on your source. So that is a huge difference. It's a lot of buying, probably some institutions buying as well. I don't think it's just retail investors or pump and dump type of thing. When we look at some of these numbers, you're going to see it is very legit. If you want to see my full in-depth analysis previously and how I found this particular stock that was so undervalued, make sure to watch my previous videos, which I will link somewhere up here for you guys to check out. All right, guys, so here right now I'm looking at the FINVolution report for Q4 and their outlook for fiscal year 2021. And like I said, these were some extraordinary numbers that were really behind the move here today, and only reaffirms just how undervalued this stock was just a short amount of time ago. And technically, you could say that it still is undervalued here today. So right here, you can see that their loan origination volume, right? The monetary value of the loans that they're making in Q4 exceeded the top end of their guidance. And for next year, that's expected in the range of 100 billion to 120 billion. That's a huge acceleration from what it was this past year. Okay, we're going to look through the presentation with you and to break down those numbers and point by point. But just some of the highlights here, you can see besides that guidance there, their revenues increased 50% from last year. And 2019 was a good year for them, actually. 2020 was a bad year, a slow year, because of the whole pandemic and the unstable economic condition. There were a lot of people that were not taking out loans, and also they were transitioning their business to a more stable one, like I mentioned. So they actually tried to take less loans, but improve the quality of each loan, make sure that each customer that they loan to is a high quality one, and they have a good chance of paying that money back, actually. All right, and you can see here, repeat borrowing rate, 88% compared to 78% in 2019. They're getting those high quality borrowers that stick around, and they like the company, they like what the company is offering, and they keep coming back to get more loans. That is a beautiful thing. We'll go ahead right here into their PowerPoint. Okay, and like I talked about, You have a company that's using a lot of technology, AI, data to really match loans to the right customers and figure out who has an actual solid credit report and all that good stuff. Understanding the risks involved with loaning out to customers. And so you can see here that, again, they do work with licensed financial institutions. It's not like some peer-to-peer lending businesses that are really shady. Very legit stuff here. And going into those loan origination volume numbers in depth now, you can see in 2018 they did 61 billion renminbi, and 2019 they did an increase. Okay, the previous year was a step back now, $64 billion for those reasons I mentioned earlier. However, next year is expected to increase 56 to 87%. All right, with that amount of loan origination volume, you definitely have to think that this is only going to increase substantially towards their top line, their revenue, and their bottom line net income going forward. Right, it's almost at the high end of that spectrum, 87%. That would be almost a double in the business that they're doing. Okay, and they're shifting more business into Southeast Asia as well. So this was only in mainland China. Once you have more business in other parts of the world, that helps diversify your revenue. And as a result, that also improves your valuation, because with a diversified business, you have your risks spread out, and they break it down all for you here. The history of the company. They work with over 50 institutional partners. They have over 116 million users again. So this is some really great, solid information if you want to do more due diligence. And this is now a really good chart here for you to see the US versus China consumer credit balance. All right, and China is lagging, but it's been increasing over time, much faster actually. Whereas in the US, it's kind of started to stagnate in recent years. But in China, it's continuing to grow. And as people have better credit and borrow more money, they have obviously more money themselves, then that's going to open up again more business. Now, here's some interesting stuff about their borrowers. So they point out the various ways they do borrower acquisition through various online advertising platforms. And you can see here that 16% new borrower contribution. So that is still, again, very low. Existing customers are the bulk of their revenue. Over time, though, then you can see how those new borrowers tend to borrow more over time. And their borrowers are all, for the most part in big cities and younger people. Very important to the longevity of this business. I say this investor presentation is a lot better than the one even previously. So they've really been putting in some work to try to advertise to potential investors here. So, give them some props for that. All right, now here is that delinquency rate that I alluded to. And you can see how those delinquency rates, meaning people do not pay back their loans, those were really, really high numbers for the first couple of years here that they were public. Okay, it's kind of a confusing chart, but essentially you can see that up here, all the people that originated in 2017, 2018, 2019, those loans were pretty high delinquency, right? 5% all the way up to 8% delinquency. However, you're really starting to see that change over the past year that they've shifted their business model. Okay, loans originating in 2020 were especially very low in delinquency. Okay, topping off at 3.8% or something like that here. And that continues to be lower and lower and lower. So it's starting to trend at like 2% and even 1% here. So that is obviously great, because when you make out loans, you don't want to actually take an entire loss on that loan, right? So that only improves the profitability of their business. So this has been several years in the making, and their team has done an incredible job of being patient and really seeing out some short-term pains for long-term profits. This was a stock that struggled for a long, long time. Since it IPO'd, it's only gone down and down, to be quite honest. But, give some props to this management team. It looks like they've really turned around the business, especially some of the co-founders here that have an extensive experience in financials and software. Okay, guys from Microsoft and various banks and auditing firms. What I want to really point out here is going to be the balance sheet and the income statement. Okay, so balance sheet wise, they have really strong short-term liquidity, meaning cash, basically cash and cash equivalents, short-term investments, $4.6 billion renminbi. Okay, and leverage ratio is going down. That means they're not borrowing as much. Okay, so that's good. Very lean machine here. And that value return to shareholders, something that I touched upon with those share repurchases, those dividends, giving a lot of value back out to all of the investors. Okay, so that income, the last thing I want to touch upon here before we circle back to valuation and what I'm doing with my shares. Okay, the income statement shows very strong growth over time. Okay, so you can see here that revenue has gone from 4.5 billion RMB, 5.9 RMB, and 7.5 in the last year. Okay, and that amounts to, I believe, about $800 million US. Yes, 800 million US dollars, and the Q4 was 284 million US dollars. So that consistent trend of revenue growth is very impressive. And on the net income side, you can see here that was down in the past year. However, that is because, again, that loan volume went down. You can see here specifically on this line, loan facilitation service fees, that went down. Okay. However, as we've seen, that volume is going to go up next year, potentially 50 something to 80 something percent. And that is going to increase their income dramatically. Okay, so overall, a well-capitalized business, safe business model, well-run. They care about shareholders. They're constantly giving money back to shareholders. With all that being said, going back to the valuation here today, you can see that this stock is currently, this on FinViz is not updated yet. It says 5.8, but actually after the 93% move here today, I believe this is more of the accurate information on ycharts.com. It's going to be about a 10.23 PE ratio. So that's trailing PE. The forward PE is probably going to be considerably lower still, but at the end of the day, it's kind of getting up to that higher valuation that I always thought it deserved. We talked about on this channel, if you go on groups and you look at valuation, you can see what typical PE ratios you find for different sectors. And so here today, FINV is in the financial sector, which trades at a 21 trailing PE and a 15 forward PE. Okay, so you could argue potentially this stock has 50% more upside, depending on how bullish you are over the next year for the profitability. It might even be 100% more upside. So I would say be conservative. It might still go to 15, but we're going to discuss what I've done with my shares here today. So what did I do here today, and what I personally recommend to people at this point in time? I definitely, honestly, still think that you can buy the stock even after 100%. But for me personally now, here's different. Here's what I'm going to say on my behalf, and for the people that got in early to the stock at around $3, $4, $5. I would say at this point in time, after it's gone up 100%, you want to secure 50 to 100% of your profit. Okay, at this point in time, a lot of stocks that go up a lot in a short amount of time do happen to go back down. All right, so here I have my penny stock portfolio, my Tastyworks account that is only made up of penny stocks, and you can see here that we've made $1,100 basically in profits year to date in only a very short amount of time since I made the 3 stocks to buy penny stock edition. And you can see here I have sold my FINV position. I only have LEJU now and LiveX. All right, so going to my activity, you can see here that I bought this stock. Let's go back to the past 60 days here. Right, you can see I bought this stock when it was $3.65 in this portfolio. Bought some at $3.84 as well, and took some profits the first round when it hit 760s, and then I bought some back again when it dipped to 420, and then here today I'm all out of this position. It's been a great time, a great profit overall. The penny stock portfolio is up around 100%, so I really can't complain with that. I had some in my main account as well. Here's some screenshots for you to see. And at the end of the day, I'm more of an investor that sticks to larger stocks and stocks that haven't moved up a lot yet. So I'm okay with taking some profits here. You know, we'll see where the dust settles. Maybe it goes to 20, maybe it goes to 30 even. I'd be so happy for anyone else that decides to stick around. But I'm going to take profits right here. But let me know in the comments down below what you are doing or what you have done with your position. And let me know if you made a lot of money. If you did, make sure to like this video and subscribe, turn on notifications, everything. Get the word out about this channel. I really, really appreciate it. And I hope a lot more people get involved and get educated. Until next time, my friends, stay well and invest responsibly.